We're doing good.
Excellent, excellent. I'd like to welcome you all again to our virtual home buyer seminar. And I invite you all to participate and ask questions along the way if you need anything. How are you doing, Miss Crawford? Good?
I'm doing well. I'm doing well.
You getting excited?
I am.
Excellent, excellent. How are you, Mr. Barton? We have Ms. Sheila and Mr. Antonio Thrower. Thank y'all so much for joining us. If I left anyone off, it's because I can't see everyone on the list. So we're going to get started to respect your time. Can y'all see my screen okay?
Yes.
Okay, and if there are any questions, concerns, anything like that, go ahead and definitely share those in the chat. Some of you all have been on with us before, so we'll kind of go through some of these slides because it's the same presentation, but it never hurts to hear it again. That way you can help someone else along the way. So the purpose of this home buyers course is just to provide a little bit of information to help you in your home ownership journey, to help you feel more secure and more knowledgeable about moving forward, and to also invite you to utilize our services for your lender because you have many, many choices. So when you elect to work with us, we definitely appreciate that. We don't take it lightly. So we definitely appreciate you all doing that. So on today, we're going to talk about some of the benefits of home ownership. We're going to talk about some of the things you need to do to ready yourselves to be able to purchase. And also we'll leave room for you all to ask any questions that you might have. So of course, renting versus buying. There are some of us who have rented in the past and never purchased a home. And then some of us here on the call have owned a home at some point in the past, maybe elected to rent. There could be someone on the call that also is possibly a move up buyer, which is someone who owns a home now. Maybe they want to buy another home and rent this house, or you could be a move down buyer where you're trying to downsize and get into something that you don't have to take care of. So renting versus buying, what buying does for you is it gives you choices. So when you own a home, you have more freedom, you have more choices, you can have more peace of mind, of course. When you're renting a home, you're paying for something that, ideally will never be yours. And you can spend many years of your life paying someone else's mortgage down. So we recently had a client to reach out to us who had been renting a home for over 20 years, the same house. And the people that owned the home asked her to buy the home. They wanted to sell the home. They said if she didn't get her financing in 2 weeks, they were going to list the home. She's paid their mortgage for 22 years, and they gave her 2 weeks to get her loan together. She could not meet that challenge. So even though you are faithful to people in renting their property, sometimes they are not as faithful to you. So when you own your own property, you definitely have more choices. When you are looking to purchase a home, it's important to have a plan in place so that you're able to actually meet that goal. So you want to give yourself a couple of months, if you haven't already started on your savings plan or making sure that your credit is in place. So financially and emotionally, there are some things that you go through. So the earlier you start, the better off you are. One of the questions we like to ask our clients when we're working with them is, what is your why? What is the reason that you want to own a home? Does anyone want to share their why that's on the call today?
Yes.
Yes, sir. Go for it, Mr. Barton.
Well, a few years ago, they went up on our lease, and they went up, I think it was like $125. And I said, I do not want people to have the power to go up on the lease again. I do not want to be up in that situation where they had the power to change our life like that. I want to be in control of my own.
I like that. So having more control over your finances, not in position to have to change your rent at a 30-day notice. I think that's all they have to give you, a 30-day notice, if that. Does
Yes.
anyone else have a why that they would like to share?
I would the tax benefits of ownership and building equity.
Absolutely. So there are some financial benefits too. So there's security, there's financial benefits. For us, initially, I wanted to own a home because I understood it because my parents had owned a home and owned a home again and all of those things. So generationally, you know, we were homeowners. Thank you, Jesus, for that. But now as an adult with children, you know, stability and knowing what schools they're going to go to and just having them feel settled, making them more productive, you know, in the classroom and things of that sort. So home ownership, it really has a lot of advantages for you, even if you're getting to be more seasoned in your life. Home ownership is still available to you. There's no age limit on becoming a homeowner or on getting a 30-year fixed home loan. Hello, Minzy family. How are y'all doing? Thank y'all so much for being on. So mentally and emotionally, man, we have a devotion on our team every morning, and it helps to kind of set the stage for what the day might bring and help us to be prepared. Because in this life, in our work, in dealing with people and dealing with flesh, you know, there's always that struggle that's going to bring itself to you. So we have to definitely be ready to fight through those struggles and adversities that sometimes can come about when we're going through transactions such as home buying. So financially, you want to think like a lender, right? You want to think like the bank. You know, how do I make myself favorable for a home loan? What are the things that I should do? It's think about like when you're dating. I don't know why that came to me. But when you're dating someone and that person's like, you know, hey, I'm headed over. I remember when I was younger, I was like, oh my goodness, let me roller set my hair and let me pull out my pressed jeans, you know, and different things like that. So, because I'm gonna see my boyfriend or whatever at the time, right? So let me get ready. So the same thing with home ownership. Think like a lender. What are the things that lenders look at? They look at your credit. They look at your income, you know, we look at your assets, how are you going to do your down payment or your closing costs. So one of the things that we do is to help you plan for that, help you make sure your credit is in order, you know, help you make sure you have an emergency fund, give you some tips on saving or on your work history. There could be some changes in your work history. So the more information you share with us, the more we're able to guide you along and help you to be as prepared and as presentable as possible. This is in regards to your credit score. So this shares with you when you get your credit scores from the three main credit bureaus. There are many credit bureaus, but for mortgage, we use the three credit bureaus. But your scores are made up of these factors listed here at the bottom. How much new credit you have, what types of credit you have on the report. Types of credit can be things such as home loan, installment loan, credit loan, personal loan, those type of things. That's what types of credit is referring to. Length of credit is exactly what it says. How long have you been established in the credit system? And it's not overall, it's almost line by line. So how long have you had your Discover card? How long have you had your Capital One card? How long have you had your car note? So building a length of trust is what you're looking for here. The amounts owed, what is the amount you owe compared to what was lent to you? It's kind of like when the Lord entrusts us with our blessings of pay and income, you know, he entrusts us with 90%. He wants us to give him 10%. So how are we actually using our credit? The credit bureaus judge us based on what we're using. So if JC Penney's gives you a $300 card, they only want you to use roughly $100 or less to look like a trustworthy customer, right? Trustworthy meaning you don't need all that credit. You manage your finances. You're not going over the limit for one, but you're also being a good steward over the usage and you're not using it over 30%. The last item here is your ability to repay, your ability to be timely on your payments. So the mortgage company wants to know they're going to get their money on time every month. So your previous payment history is important. If, like many of us, you have had some times in your life where you've had medical problems, job changes, just poor decision making, it doesn't mean you cannot recover from that. You can come back, you can recover, you can start that track record again. That track record needs to be roughly 12 months. So you want a good 12-month payment history to show that in the future you plan to continue to be worthy of making the payments on time, or have the ability to make your payments on time. These credit score variations are sharing with you what they consider excellent credit, very good, not as good, and there may be fair and challenging. So this is to no means like what we look at for lending. We look at a variety of things for lending. You can get a home loan with as low as a 580 credit score with just a traditional 3.5% down payment. But if you need down payment assistance or some of the programs that are out there, those programs can then add other layers or guidelines that we have to meet in order to use their programs. So remember, with our team, we earn by you closing on your home. So we want you to close, and we want you to close as soon as it's within your means to do so. So we will never tell you anything to hurt you, always to help you to get to that end state. But the more you share with us, the better we can help you. Anybody have questions about credit? I forgot to stop and ask. Anybody have?
For down payment assistance, what's our average credit score for if you qualify for down payment assistance?
Yes, sir. So, Mr. Barton, I believe you're in the state of Arkansas, and the score requirement is 640 for down payment assistance.
Okay.
The state of Texas is 620, and I don't think we have any other states on, but if we do, please shout it out and we'll get that information to you. So you just want to develop some good habits, some good practices, because once home ownership is on your plate, there are more things you have to keep up with. So it's great to have those good habits in place before you actually own that house. 1 in 5 Americans do find errors on your credit report. If you're looking at consumer sites for your credit report, some of you get credit reports with your credit card services. Some of you may use Credit Karma. Those are great services to keep up with the accuracy of the reporting. If you find something that's inaccurate, you want to dispute it. You want to try to get it corrected as soon as possible. So you want to do those things. These are all preparatory things, and it just helps to make your credit score improve when you get those inaccuracies removed. Your monthly survival number. So I like to look at this like your emergency fund. So being a good homeowner, it comes along with being prepared for the unforeseen emergencies. Depending on the way that you earn your living would be the recommendation of the amount of months of emergency fund you need. So your emergency fund should include your main living expenses, not all the extras, but your main living expenses. If you are in a fixed income or a salaried income, I'd recommend 3 months of that set aside. If you are an entrepreneur or self-employed person, or you get paid heavily on commission and bonus, 6 months would be ideal. And you may say, well, Tomekia, I really can't wait that long. Well, remember, it's ideal. So you definitely want to still have in your budget a way to save on a monthly basis, because nothing can hurt you worse than having, your hot water heater go out, and now we don't have $600 in Arkansas, $1,800 in Texas to replace that hot water heater, right? So you want to keep some type of emergency fund for those 1 or 2 things that could happen if you're not a handy lady or handy man. Thank God for YouTube. All right, so here at Cross Country, we have all loan types. So whatever your needs are, 99% of the time, we have something to meet that need for you. We are a whole in-house lending institution. We have non-conforming products as well, and we have the ability to do brokering for those off the charts type situations. Those come along very seldom. Most clients are traditional home buyers and need a traditional type of loan program. So we do conventional loans, FHA loans, VA loans, and USDA loans. Conventional loans are looked at more on a higher credit score. So you need a nice credit score to go with the conventional loan. FHA, you need at least a 580 or above. VA, it's really not credit based, but ideally you want to have about a 580 or above. And then a USDA loan starts at a 600 and above as far as credit scores are concerned. But a USDA loan is going to be for a rural area outside of the city limits. It's going to be a nice little drive to the freeway, probably 5 or 6 miles, and then you can head on to where you got to go. So a USDA loan would be nice for a work from home person who doesn't have to leave out a lot, or maybe their kids are out of school and don't have to really worry about activities and such. Anybody have a question about VA, conventional FHA loan types? And I don't think we have any veterans on, but anyone have a question? Hi, Ms. Funches, how are you?
Well, I'm on Social Security disability,
Yes, sir.
and if I'm my wife is on Social Security disability too. Now she did declare bankruptcy recently and got it discharged.
Yes, sir.
I don't know how that's gonna work because she helped pay for half of the bills, but my credit score is still sound.
Yes, sir. So when you have a bankruptcy, a recent bankruptcy, that's a great question, and thank you for your transparency. An FHA loan can work really nice because if it's a Chapter 7, that means they wiped your debts out. Once you have your discharge date, you need to wait 2 years after that. And within that 2 years, you need to be reestablishing your credit. You need to get it back on track. If you had a Chapter 13 bankruptcy, as long as you have a minimum of 12 months payments into that bankruptcy and they are on time and your trustee allows you to purchase a home, you can start the home purchase process. So, but adding that bankruptcy and then down payment assistance, like we have to go through all of the guidelines in addition to the normal FHA guidelines, we have to look at what's required to add down payment assistance. So you have to have that 2-year window in there after that.
Okay, so let's say since we're married, since I didn't do it, if I want to do it by myself, can I not include her income at least since she
Yeah,
gonna
you're
help me out?
Arkansas. So Arkansas is not a community property state. So you could use your credit, your income. It's just that if your income is not enough to cover the price point of home, then we have to wait for her to catch up. So that's
But could
really,
I use? I guess what I'm asking, could I use her income to say like I can't use it like that? Okay.
you can't use her income. So the only way you can use another person's social security, disability, income is if that person is disabled to a capacity where that check is written to you. So if your wife was mentally challenged and she couldn't take care of herself because she has a limitation in her mind, and you're her caretaker and you get her check for her, like it's written to you for her, then you could use her check.
Okay.
Like parents, if their kids get disability, they can use their kids' disability as long as they have 3 years left in school.
Okay. So
And
basically,
really written
if
to
I'm
them.
correct, if we use my income, she will have to still sign since she is my spouse. But it won't hurt me as far as getting a house, will it?
No, she has to sign the deed. Yes, she has to sign the deed. That's true.
Okay.
Yes, sir. Great question. Anyone else have a question as pertains to any relationships or estranged relationships? All right, so this slide is around it's set up around what is called a temporary buy down. And what a temporary buy down is your ability to take seller paid closing costs to buy your rate down temporarily. So let's say if interest rates today were 7% interest and you wanted a 1-0 buy down, you would have a 6% interest rate for your first year and then 7 for the rest of the years. So the purpose of this is to help you have a more affordable mortgage payment temporarily in hopes that the rates will come down and you will refinance. That's the goal of this. Most of you on this call, it's not going to pertain to, but we do like to share this slide with you so you're a little bit knowledgeable of what a temporary buy down is. It does not partner with any type of assistance programs though. So it's not for anyone who needs any down payment or closing cost assistance. Home is within reach, yes. So this is just sharing with you that we do participate in down payment assistance programs to help you. We will look for whatever is out there because it's a competitive time right now. So you have a lot more home buyers and a lot less houses. So it's still pretty competitive, and a lot of people do need to use down payment assistance so that they can get into a home, you know, with as less out of pocket as possible. We're also finding that with some sellers, they're not doing a lot of repairs, you know, sometimes. So a little bit of the cash that you may have set aside, you might need that to do some touch-up paint or replace some carpet or something of that sort. So you really need to have in mind, and I'm going to use Miss Crawford, for example, because we talked many times before she actually went out to look for her home. But because she had a list, like her 3 or 4 things she desired in her house, it took her no time to find her house when she went and looked. So if you think about what are those 2 or 3 must-haves, if I have these 3 things, this is my house, I'm good. But if you don't have that needs list, or I'm not gonna say really want list these days, because of so many things we want, we can add, you know, we can change up the color of something or change some fixtures and make it a certain way. But what are those needs? You know, what area? Do you have to have 2 bathrooms? Do you have to have a front porch? Do you have to have a 1-story? Here in Texas, you know, it's hard to find a 1-story house. So do you have to have a 1-story? Do you have to have a flat yard? What are those 3 or 4 things that I gotta have this? Now this other, I like it, but I gotta have this. So because you're trying to get in a house so that you're not paying rent, you're building equity, you're building generational wealth, but it might not just be the house off the TV that Joanna Gaines built for you, you know. So we have to keep things into perspective so that we don't overanalyze when we're searching. We're meeting our needs, you know, we're being blessed. And at some point in the future, you always can purchase another home as well. So your cash. So of course, recommending that you do have some type of emergency fund. This does not mean you can't get a home loan without a bunch of money saved. This is really just something for you to have more security and peace of mind. But with your down payments, most people fall within this category where they're using an FHA loan, 3.5% down. If they're a veteran, using a VA loan, no down payment. If you have a reasonable credit score and you're eligible for conventional, you have a 3% down payment if you are considered a first-time home buyer. All right, so when you're looking into your total cost for purchasing a home, you want to also take into account closing costs. So when we set up meetings and we speak with you regarding your payment, the money that you need, we talk to you about planning for your closing costs. We work with your real estate professionals so they understand how we have things set up for you so you have a successful purchase contract so that you're in agreement and we're working toward one common goal. So we want your experience to be joyful as possible. So planning and preparing so you're not surprised. That's my goal. We don't want any surprises. And when it comes to your closing costs, you want to estimate somewhere between 2 up to 5%. So there are also things changing in the real estate industry where when people buy a house, they could be responsible for paying their realtor. Whereas now, these days, it's really not that way, but it could become that way. So we could be seeing some changes come down the line, and we have to prepare for those types of things and have these discussions as they come to us. Anybody have questions about closing costs? And we're going to go through it a little bit more in detail shortly. Okay, so this is a breakdown of what closing costs can include. So one of the expenses you have is called a home inspection. That's the first thing you do after you have an accepted contract. It tells you all of the details about the house. It's basically like a doctor's visit or a physical. They're going to check all the important parts, the operational parts of the house to make sure it's safe. They're going to give you a report, and then you're going to meet with your real estate agent to discuss that report, and y'all will make requests to the sellers to meet anything that you're not comfortable with, to see if they can make it right and make it where it's comfortable for you. Your appraisal, this is to make sure you don't pay for something that's not worth what you have told them you will pay for it. So the appraisal is all about value. It's all about appearance. It's all about the houses around it that have sold. So it's to make sure you're paying a reasonable value for the property. Homeowners insurance. This is to protect the home and the items in the home. So it's a big step up from renters insurance, homeowners insurance. There are some states where attorneys are involved in your closings. Arkansas is not one of them. Lender, so there are expenses for having a mortgage company or a bank. So having a mortgage company or a bank, it's not free either. Everybody's got to get paid. The title company also has fees. You also have property taxes that you have to set up your escrow account. And then you have interest that you pay for any days left in the month in which you close. That's called prepaid interest. So you can estimate 2 to 5% of your purchase price to be your total closing cost. And the reason it's not 5% most of the time, it's because some houses cost a whole lot and some fees are flat numbers, so it would just never get to 5%. But we like to disclose these things to you. Your income, so some of the documents that we look at are going to be your pay stubs, tax returns, W-2s. So it's important that once you are serious and ready to go as far as applying for your home loan, you have your pay stubs. If you're on fixed income, you have your award letters that are current for that year, not old ones, but current ones for that year. So get yourself a password sheet. Make sure you have logins for your payroll, your bank, Social Security Administration. Make sure you have those logins and passwords handy so that everything we need, you can grab it or you can allow us to help you get it and try to streamline the paperwork part. Because getting the loan in place, it can be easy if you have all your stuff at your fingertips. It's not hard at all. So don't let it, be fearful of it. It's not hard, and we will be here to support you. Debt to income ratio, and like I had a class last night for a realtor, and I was telling her people this is exactly what it says. It's how much do you earn compared to how much your monthly bills are. So when we're calculating your debt to income ratio, that's based off of your gross monthly income before taxes come out, before your 401k comes out, before anything comes out. We're looking at your gross income per month compared to how much you pay on a monthly basis for your debt that are on your credit report. So your credit report debt and child support if you have child support, right? Or you might have a loan that has not yet shown up on your credit report. So you might have bought a car last week and it's not on your credit report yet. So we have to add that because that is now a debt that you have. So it's important to share everything that's going on and that you have future coming and going because we want to make sure we do the calculation right. We give you a good pre-approval. And I believe my processor is on here. I think, I'm not sure, but Kim is our processor and she helps to button everything up. But we want to try to make her job easy because there's other things that come up along the way. So we want to do a good job on the front end so that she doesn't have to harass you for additional paperwork later on. But this is just sharing with you some of the monthly debts that most people have: student loans, car payments, credit cards. And I would advise, if you currently do not have a car payment and your car is in working order, please try to keep that car note off your credit, because that's one of the things that keep people from buying a house. Their car note these days is more than their house payment's gonna be. So try to keep from buying a car if you can. The lower your debt ratio, the lower your risk. Lending is all about risk. Have y'all ever had someone ask you for a loan, personal loan? Can you let me hold this amount of money? Anybody? Nobody has ever asked y'all to borrow money? Somebody on here has been asked to borrow some money. Who is it? Nobody.
I have, and I told them no
Why you tell them no, Mr. Barton?
because I didn't believe they had the ability to pay me back
What?
as fast as I wanted them to.
And what gave you that? Like what made you think that?
That payment history.
Payment history. So it's very interesting that you say that. And that's why I tell people I'm from Arkansas. I was born in Alabama, but I was raised in the hood, and like I have a little bit of street sense. And I tell people it's common sense. So lending mortgage is common sense. So if you think about your situation, because I have people call and they might say, well, yeah, and I just gave my car back. You did what? I just gave my car back. It stopped working. I gave it back. So you let your car go repossession. That's what you're really trying to say. So it's common sense. And if we think about some of the things that we do, like it's unfortunate that your car is not working anymore, but the bank who gave you the money for the car still wants their money, right? So we have to go through the proper channels to fight wrongs when we're wronged and when things aren't the way the person told us. We still got to make the payments until it gets resolved, like legally or through the right channels. So I'm asking you to kind of think about things before you make decisions to not pay, if that makes sense. Even a copay at the doctor. Well, they didn't tell me I was gonna have a copay. Okay, well, did you call them about it? No, ma'am. You haven't disputed it, you haven't called, well, no, ma'am, I'm just not gonna pay them. So you have to call and take the steps to resolve it. And when do you best resolve something is right away. You best resolve something right away, not waiting. So if you have something that's indifferent, that's wrong, an old lease, an old car, whatever it is, it's best to try to resolve those things as soon as possible. Because the longer that they sit, the more turnover those people have in their employees, and no one knows where your stuff is. So it's best to resolve, I'm gonna say, indifferences right away. All right, debt to income ratio. This just says here your debt to income ratio, keeping it low will help ensure that you can afford your debt repayment and give you peace of mind. So that's what we're talking about, keeping your items as manageable as possible. Basically resisting the temptation to overspend or buy things that you don't need at this time. So let's talk about your actual monthly payment. Your monthly payment is made up of 4 things. Your principal, interest, and those 2 things go hand in hand. Principal and interest, your property tax, and then your homeowner's insurance. Now, some of you will have what is called an HOA, and sometimes you might have a mortgage insurance, depending on the loan type that you have. So most areas here in Texas, there's an HOA fee. Most areas in Arkansas don't have an HOA fee, but some of the newer communities will have a small HOA fee there in Arkansas. So we go through your entire total monthly payment, and what we'd like for you to do is analyze your budget and tell us, what is it that you'd like your payment to be? What is your total payment that you have in mind? Where do you see, hey, this is my max. I really want this payment, but like this is my absolute max. If you can tell us that, that's going to help us be able to plan accordingly and help you meet that budget, stay within your means, give that information to your realtor. Miss Gonzalez, how are you? But we're going to be able to share that information with your realtor so that he or she can find a home that suits those needs. All right, home buyer roadmap. So this next slide, it just shares with you all of the different people that are involved in helping you to have a successful home buying transaction. So your loan officer, which is me, your real estate agent, we work closely together. The appraiser, again, if you have an attorney state, which you don't, the title company, the home inspector, and your home insurance agent. So there are tons of people that work hard to help you get into your home and get your keys. And none of these people earn a living without you, the home buyer and future home seller, if you ever were to sell a home. So just know that you are so important to all of us. We do not have a business without consumers using our services. All right, so this is kind of a prompt for you to schedule a meeting or have an introductory call with us at least 6 months before you look to purchase a home. Again, this is a guideline. Some people reach out to us today and they close in 4 weeks because their stuff is already together, and they just kind of waited and now they decided their lease is up and they're ready to buy. So you want to meet with us when you're comfortable, but the sooner the better. Pre-qualification versus pre-approval, and we'll go over this one real briefly, but a pre-qualification is basically you placing your information into the computer or you verbally telling us your information and we haven't verified anything. So we're giving you a pre-qualification based on your word or based on what you typed into a computer system. A pre-approval is you giving us your documentation and we verified to the best of our ability your income, your work history, your assets, or we at least know where your assets are coming from. And we feel comfortable telling our real estate partner, hey, it's okay to show this client a home. They've supplied their documents. I don't foresee anything wrong, happening here for them. The third type of approval that we have is called a fast track approval. And I don't have a slide about it. I'm going to get one put in here though. But our fast track approval is where we take all of your documents and we go ahead and get your file processed and approved. Miss Cynthia, you still on? And so Miss Cynthia,
I'm still here.
yes, ma'am. How do you feel that going through like the fast track approval and then finding a house, how did that experience go for you?
So when I found the house, that my dream house, then I was ready to put a contract on it. So that helped
Yes,
being pre-approved.
yes, ma'am. After you got your contract in, did we have to get many documents from you after that?
Not very many at all because you already had them.
Excellent. So again, it's all a part of providing some type of peace of mind for y'all because this is the largest purchase you will make and it's already going to be stressful enough. So if we can do anything at the front end to help alleviate some of that tension and anxiety for you, that's what we're going to do. And that's what the fast track approval process does. It basically checks all the boxes. It digs through the weeds and gets all the ugly stuff out. And then when you find that house, we are good to go. All right, pre-approval positives. Again, just determining your budget and setting expectations for you. I don't think that's on here, but setting expectations for you because when we're going through that fast track approval or pre-approval process, we're setting some expectations. You're having the ability to ask questions. You're not feeling like you don't know what you don't know. It gives you buying power though. So most of the time when you place an offer for a property, the listing side, they're going to be looking for that cash offer. Yay, I got a cash offer. Well, it doesn't happen often, but it does happen sometimes. So if you go through our fast track approval process, you'll be next because your file will have been through underwriting and they can feel a little bit more secure that you're going to close. But we want to avoid any setbacks and we want to save you time. All right, so again, these are just some of the items that we ask you for. Paychecks for 1 month, W-2s or tax returns for the last 2 years, your assets with all of the pages, and then we do a credit check. So we will do a hard credit inquiry when we're ready to get that full approval done. But at the front end, we do a soft credit inquiry. That way you don't have to worry about losing any points. You can feel safe that, we're watching out for your credit score. Finding a home and making an offer. So this is where we give you back to your real estate professional. And your realtor is going to help you identify a home, take you and show you a few homes where you desire. And then they're going to help you put together a contract. So they're going to work with us. We're going to work with them to help make sure that contract meets the needs of your budget and your cash to close or your down payment assistance program that you're working with. We're going to work together and partner to make sure that that happens for you. After you have that full contract, that's when your application that we have on file becomes a legal application. So once you have a property address, that's when we have a legal mortgage application. All right, and so then we're going to redisclose to you, we're going to lock your interest rate, and we're going to work on setting a projected closing date. So here are some of the do's and don'ts. So once we have that full approval and application and process. The things that we ask you to do really is just to kind of sit on your hands and don't do anything. You know, stay working at your job, stay doing the hours you were doing. Don't take off and go on vacation and call in sick and none of that. Keep doing all the things you were doing, and if anything, do them better. Pay your bills down more, save more, go to work more often. Don't do anything less because it could throw your pre-approval into hot grease. We don't want that. We don't want it to be on ice. We want it to be on chill. So we just ask you to sit on your hands. In about 30 days, you can do whatever you want to do. So if anything comes up that deals with your credit, your income, moving money around, somebody want to borrow your money, call us. We'll tell them, not this time. We can't do it. So just call us for anything that pertains to your finances when you're in this stage. We don't want anything to jeopardize your ability to close. Underwriting and appraisal. So again, if you've already gone through our fast track underwriting process, when you have your contract in place, that underwriting is going to be pretty quick. We're going to get your appraisal done. We order your title work. And a title search is basically just to make sure that that home does not have any liens on it, that when you take ownership, it will be free and clear. It will be yours and no one will come after you to foreclose on the home for any reason. So that's what the title company does. They also research your background to make sure you don't have anything in your past that will keep the bank from being able to foreclose on the home if they needed to. So if you have any old derogatory child support, if you have any old claims with the Workforce Commission, if you have any student loans that are derogatory, things of that sort, federal debt, judgment, liens, if someone came after you for a car that wasn't paid for and they took you to court, those are things you should share with us because the title search is going to find it. So anything you think could be something from your old past, let us know because we can look that stuff up early instead of waiting till the 2 or 3 weeks for the title work to come back. And then we're going to have your closing. Working with us, if you're not using a down payment assistance, your closing is electronic. You only spend about 15 minutes at the actual title company to close. If you do have down payment assistance and you have a full package to sign, it's about a 40-minute closing and you want to allot an hour to be at the title company. So you'll get there, you'll meet with the closing agent. In many cases, your realtor will be there, and I like to be there if it's local to me. If it's not local to me, I always call in on FaceTime so that I am there to answer your questions for you and be there. But we always prepare your documents. We try to have them a day in advance. So on your portal, you can review your closing documents. And then at that time, you can ask any questions, which you won't likely have any because we do such a good job along the way. But if you do have a question, we're able to answer that question so that you have a smooth closing process with the title agent. All right, so this slide shows home inspection versus home appraisal. And we talked about this a little bit earlier. So again, the home inspection is more like a doctor's review. They're checking the heartbeat, they're checking the pulse, they're getting the blood drawn. You know, they're telling you what you might be up against, what might be coming down the line. They're putting you on medication. And then we have the home appraisal. I liken the home appraisal to a cosmetologist or a beautician. You know, they're just looking at the exterior. You know, has your hair in place? You know, what age are you in? They're looking at the seasoning of the home. Like, is this a 20-year home, a 30-year home? How does the roof look? You know, are there any cracks in the bricks? So they're looking at what they can see. They're not pulling up the rugs and turning on the water. They're not looking behind the picture frames. They're not doing an in-depth review. They're just trying to see, is it pretty? Is it in livable condition? Can these folks move in and be good? You know, they look at the foundation, things of that sort, but they're not going to do an inspection. So your real estate professional will always advise you to have a home inspection. That's that detailed review, which is for your benefit. All right, closing cost breakdown. So again, some of these are just follow-up sheets so you understand some of the things that are listed on your actual closing statement, which we go over with you. But for lenders, lenders have underwriting fees or origination fee. Title companies have fees. You have prepaid items for insurance, taxes, and interest. Your escrow, that is the setting up of your insurance and taxes so that they can be paid on an annual basis to those entities. Appraisal fee, transfer tax, this is in a few states, Arkansas is one of them. Recording fees is recording of your deed. Points, this is if you're buying your interest rate down or paying for any temporary buy downs. And then there could be other costs along the way. So let's say you have to have a septic inspection or something like that. You may have a cost for a septic inspection. Or let's say you're in the state of Texas and you need a survey. So the seller may pay for the survey, you may pay for the survey. So all of these things are already negotiated, but this is just a list of some of the common costs that you see on your closing statement. So I'd like to open the floor for any questions at this time. I almost made it. I was 1 minute over.
Just a quick question on the appraisal.
Yes.
Do we pay the appraisal? Will somebody bill us, or will that come from, will you pay the appraisal and then you get it back at closing?
So sometimes the appraisal order will send you a link and then sometimes it won't. So if it didn't send you a link, it'll just be on your closing statement.
Okay, thank you.
You're welcome. Great question. Hi, Ms. Nettles. How are you doing? I can't see everybody on here. I certainly appreciate y'all. What kind of questions do y'all have at this time?
For me, you've covered the basics, and I appreciate that. As time goes on, I will have questions, during the process, but this is very educational. Thank you, Ms. Hunt.
Thank you. Please, y'all, if there's people y'all would like for us to invite, we'll be doing it again in what's this, April? So we'll do it again in June. I believe it's June. So if y'all have one person that you think would benefit, let us know who they are. We won't harass them. We might, I'm joking, but we won't harass them, but we will invite them to hop on here. Because I think it's so many people now that are not homeowners, and we're earning the money, we're paying the rent. So, and there's programs out there to help us. So really it can be kind of like, I'm a little scared, I'm not really sure, I don't know who to trust. So if you give them a good referral or someone they can trust, you're gonna help them start building their wealth. Have y'all ever heard of the word a net worth? Have y'all ever heard of that word, net worth? So in financial classes, or if you're looking at what is called your profit and loss or your budget sheet, net worth, it is not all about the money you can see in your account or your 401k, your stock account. It's not just that. It's the equity in your home. Let me tell you, last month I was helping this gentleman with our Equity Express loan. So our Equity Express loan allows you to access your equity. Within 5 days, you have a check for your equity. So I'm helping this gentleman. Last month, he didn't have enough equity to get his Equity Express loan. Guess what happened this month? Just 4 weeks later, his house went up $20,000 in equity. 1 month later, I'm done. I was like, I'm out of here. I'm done. So his net worth grew $20,000 in 4 weeks. You see what I mean? So when you own a home, that increases your net worth. And that means that if you become to where you need to sell your home or rent your house out, you moved in with a child, let's say we get older, or let's say my parents, let's use my parents since they're retired. Let's use my parents. So my parents say, we're going to come live with y'all because, dad's this or mom's that. We're going to come live with y'all for a year. Okay, well, we can rent y'all's house out. We can get twice as much as what you're paying on mortgage for the rent. We'll do a 12-month lease. We'll tell them it's only 12 months. Then they gotta move out, y'all can move back in. Or we can Airbnb it. We're gonna Airbnb it, because all kind of stuff is going on in Arkansas. We're gonna have 1 weekend a month. We're gonna make the mortgage. So it gives you options, and you still own that property, so you still have net worth. So let me give you this house. And I think I did this last time, but I'm gonna do it for you right now. Okay, so we have one rental property right now, one rental property. It's in Killeen, Texas. And I was doing my taxes all late. Okay, because I was taking care of myself last. So I was preparing my taxes, and I looked at the sheet, because you putting your rental on there. So this is another thing, your rental or your asset. And like Miss Cynthia told us earlier, home ownership provides tax advantages. So this property we purchased in 2010 for $75,000. Okay, today, just on Zillow, it's worth $222,000. That's net worth. So if we got in a bind or something of that sort, we could sell that property for $222,000. Now, how much do I owe on it right now? Anybody want to guess?
0.
I actually owe $25,000 on it.
Okay.
I've had it since 2010. I've had it almost 15 years. Is that right? Is that right, Mayor? Sorta. So I still owe $25,000. I do always pay extra on the principal, but it was a 30-year loan. So by my calculation, I should be done paying for it maybe two or 3 years. So I paid off early. So I almost make that whole 222 if I were to sell it, right? So that is the power of net worth. And Miss Cynthia, if you had kept your house, right? So if you, and of course is, what is it? Hindsight 2020, is that the saying?
Yeah. Yeah, but I had paid it off, but I
Praise
sold it.
God, praise God. And
Yeah.
so we had I can't keep up. I think 2 other property, 3, I can't keep up. I wish I had kept them all. Did not do that. And what kept me from doing that was fear. Fear did. But what if? And what if? So you got to make your decisions based on what you know today. You can't make them based on what if. You can't do it. You got to make them based on what you know today and what the Lord is leading you to do. Are there any other questions y'all have for me? Miss Nettles, I didn't know you were left-handed. Me too.
Yes, I am.
Oh, goodness. I'm excited for y'all. Would anyone like a follow-up meeting? If you do, definitely text my team or myself, and we can go ahead and make an additional follow-up. Miss Nettles, I'm so excited for y'all. Y'all are on your way.
Oh, wow.
So I'm super excited for y'all. I know you've been working with Miss Kim to get your fast track approval. So you are where Miss Cynthia she went through her fast track conditional approval, and that's what you and your husband are doing. And then when you find your house, you don't have no question marks. You found your house, you're ready, you're good, you're good.
Beautiful.
Yeah, so thank you so much. I appreciate y'all all.
Thank you.
Oh, you are more than welcome. If y'all don't have anything else, we'll let you go for today, and we look forward to seeing y'all on the next opportunity.
Okay, thank you so much.
You're welcome. Have a blessed day, y'all.
Bye-bye.
Take care. Bye.
Bye-bye, sweetheart.